I'm Jessica Minton for IB Times TV, and joining me today is Jonathan Corpina from Meridian to talk about how investors are feeling so far this week about earnings. So Jonathan, there's been a lot of different companies coming out with earnings, Apple, Caterpillar yesterday, and then we had GM today, but it seems there's a common thread that these companies are having some issues, especially with China. So when we do look at that, especially with China's PMI showing that manufacturing and global growth is slowing more than expected, how concerned are investors about that right now with companies?
I think investors are very concerned, and we can back this theme up a year ago when we were going through earnings season. It was all about exposure to Europe. So we've seen this before, we've been through this before, but clearly the concern is there. The companies that you're discussing are global companies that have exposure everywhere. So when we hear headlines coming out of Europe and headlines coming out of China, we know that they are going to affect these companies. So it's just a question of how much exposure do they have and how it's going to affect the companies moving forward. I think the companies have done a very good job of managing expectations of the forecast and exposure to China. And clearly in the numbers that we're seeing, the companies are sustainable at this point. Their outlook is somewhat tapered back a little bit. And it gives investors that sentiment that there is somebody who's paying attention to what's going on and they're not ignoring the big elephant that's in the room. So when we're looking at the company's earnings, we're looking directly at, where are they today? And then we're looking at forecasts moving forward. Economic data coming out of Washington clearly playing a part of it. And then all the headlines coming out of Europe and China play a part of it. So it's just this one big pot that everything's getting into, and I think people start pulling different things out of that and what they really want to look at. In a week like this week, we've been focusing majorly on earnings reports. Not a lot on the calendar as far as economic data is concerned. Next week, we've got a full calendar of economic data. We get the unemployment number that's coming out at the end of the week. Full calendar of earnings reports, so it's going to be interesting to see how this market reacts to it. The market has had a very good run, and I think investors are waiting for opportunities to make sales. In my opinion, they've had opportunities in the past, and they haven't yet. So this market is starting to continually trend higher. S&P getting close to 1,700, pulled back a little bit here. So heading into next week, I think investors are going to be very cautious about when to take those short-term profits off the table.
And finally, when we do have all of these earnings reports coming out for all of these different companies, what is really important to look at and dig deeper into those reports to really analyze and see how they are doing?
So clearly, as we've spoken about, it's exposure to Europe and exposure to China. One thing that I like to look at, and it's always kind of stands out to me, is cash on hand. So we'll go back 5 years ago to the earnings reports and getting through this economic crisis. And we're always focusing on cash on hand, cash on the books, and then what do they do with that? So we're getting to the point where companies have substantial balances that they're holding on to, and shareholders want to do something with that money. So there's a few things. One is buy stock back, and that's going to help investor confidence. Two is invest in your own infrastructure, invest in your people, invest in your product, invest in your company. And three is going to be buy other companies, mergers and acquisitions. So I like to look at that particular line that's there to say, all right, what's the gunpowder that's sitting there, and then when are they going to use this?